Greetings, Jedi traders. David here of TradingFibs.com to bring you the daily trend for December 9th, 2015. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market. See what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Contract rollover week, FOMC next week. What a way to get into December, and we're going to focus here on the NQ, wrap it up with the other indices today and see where the move of the day was. Here was the overnight session as price action finishing up yesterday, giving a entry to the downside here on market internals. We're starting to set up in the red here, but it was chop into the pre-market. As we go ahead and look at the big picture. Big picture for the NQ has pretty much been to the bullish, a little bit of neutral as price action breaking down under the 5 SMA. But again, the bigger picture, daily, weekly, and monthly, has been all to the bulls. And here we saw price action yesterday bouncing off the 38% and upside after a bounce off the 61.8, but unable to get above that 127% fib extension. Shorter term picture, swing position, bearish to bullish neutral as price action coming down here, but still in a bullish pattern, and still seeing if we might get some support here on the 51.44 as price action was heading downward. So what did today's session bring us? Any presents? Oh, no, it didn't. That overnight move that we saw already coming to the downside, further decreasing. Not coming off too drastically, but that market ran it up from the open, European close, moving it down, and there it was, the remainder of the session just chopping out. Very similar picture on the other three indices. We'll wrap that up at the end. Let's jump into setup number one. As we saw, pre-market action was to the upside, and there it was, setup number one. Now, why wouldn't you well, you could grab this. You had a sell signal here, T3 moving average crossover 534. That's right. Look at that reject, 51.44. Maybe the trend was to continue downside. 20 tick was eventually downside. Again, we have to go back. We're focusing on this area here. 20 tick was upside, and there's your market action on a 1-minute chart. It's price action coming down here, but unfortunately, AD line is all moving upside. So tough to take a trade to the short there, but that was setup number one, right down to the Globex low. So not a bad entry if you took the short right out of the gate. It was post 2 minutes. Put some ticks in your bag. You didn't have all charts in sync, but there it was, setup number one. What gave you that entry? Well, you got 1, 2, at least 3 out of the 4 charts in sync. Another thing to look at is sometimes you want to see, even though you haven't had a crossover over here on the 20 tick, you still had a solid Heikin-Ashi bar tailed down that was moving. It wasn't the first bar, it was the second bar, maybe a little bit too later in the middle of the move there. You know, it's a tough call. It is the market open. You have an AD line going the other direction. Not the best of setups, but definitely setup number one to the downside. Let's jump right into setup number two. Much better in sync as we see price action breaking above the 51.44 here at this point. We already have the 20 tick in the green, following the direction here now of the AD line as we got a nice strong tick count at 400. There's the buy action at about post 8 minutes of the market open, and price action popping to the upside. Setup number two after that down strike, and there it went. Setup number three, again, we're looking at the bigger picture of the Fibonacci lines as we had a price line 61.8 on the 15-minute chart. And there was the line, 46.80. So if we were going to change any daily trend change here, this was going to have to push up above the 61.8. So didn't get much of a run there as price action on setup number three started to push up. A little bit of chop here. Again, I'm not sure you really wanted to get downside yet. What you got is, what you have here is you have price rejection at the 750. You have a 20 tick upside. Price action already finding support here at the 50. So if we go back to smooth, this is setup number two. All right, price action AD line. You might have hopefully got some ticks out of that. And then what happened here is there's that move right there. And then what happened is we started to get some chop action, which probably would have taken you out. I wouldn't have sat in that. But price action chopping here. Again, you look at that buy signal. So why didn't you take that one? Well, I got a 61.8 fib line. I want price action to push above and hold above, so that holds you off. And at that point, you're also almost you're approaching that 750 line. It's this entry that we're talking about right here that's set up number 3 with the tick count already breaching above that 400. You got price action that's finding the support here. So this buy signal versus this buy signal here. All right, I'm looking at, and again, you have to go back. This buy signal here is about 9:43 Eastern Standard Time. Again, price action pushing up here, but the only reason you would have stayed out of this buy signal versus perhaps this buy signal is that you were buttoned up right against the 61.8. My preference of choice, even though price action here, the buy signal is below that 61.8, your same dilemma is you want to wait till it breaks above that 61.8, and there's no reason why you can't jump in the trade back here. I'm sorry, up above the breakout of the 61.8 is you have the 20 tick chart in your favor. You got price action that held here at the 50 and you're holding above the 144. The only thing you got to be concerned about is the AD line is holding right here at 750. The question is, are we going to the daily gap? And the daily gap right up there at 46.87.25, and oh, it misses it. Now, you never run your target. If you're going to take a first contract off or you have a target in mind, you say to yourself, well, I'm not going exactly to the target. Recommended at least 3/4 to 1 point away. You would have done well there and most likely been taken out because your stop would have moved to break even. But there it was. We broke above that 750. 20 ticks still to the upside, so we've got this early morning run up on price action. We got some time to go before the European market closes. We got crude report though coming out in about 33 minutes from this move. So it was set up number 4. Again, you had that pullback, some chop action. You got a buy signal again. You're looking for the buy signal to break above that 61.8 fib line. AD line is holding up. 20 tick is turning around. You've had all this chop, but you know, market is supporting itself. It's not breaking down below that 51.44. And there you're starting to get that crossover. 3 out of the 4 charts with a solid Heikin Ashi bar. Look at the tick count, 719. Breakout above the 750 on the AD line, and boom, right to the daily gap we go. How about that move? Nice move there on setup number 4 to the upside. AD line breaking upside, 20 tick, and you're all gung-ho. It's contract rollover coming on. We got a strong tick count, and this thing is just going to run for the day, right? So there it was, that fib line. That's right, that 61.8 we were talking about before that was holding resistance. We couldn't break above and hold it. Finally, price action on this final move, post the first 30 minutes, breaks to the upside, hits that daily gap, and that's all a little bit above that, and she couldn't go no more. And so setup number 4, price retracing, bringing a fib line from the lowest low to the highest high. AD line is plateauing, 20 tick, 51.44, still in the green. Price retraces back to a 50%. Find some support here. What are we approaching? There it is. We're at 10:20. We're approaching the crude release time. We got that 50% retrace. There you go. Setup number 5. Crude comes out. Price action pulls up with some good ticks to the upside and retraces down that daily gap. AD line upside. You got the 50 above the 144. Everything looking great on the crude release. And we even push up even a little bit higher. There's your crude release. We had a pullback, and there it was, almost the high of the day right there. NVPOC, naked VPOC, 46.99. Had you taken all contracts out there, that would have been the move of the day. Had you shorted there, that would have been the move of the day. But hey, you don't know what's to the right of the chart, so you manage your trade. So let's see what happened here. Price action, AD line upside, 20 tick upside. We're on setup number 5. Price action holding to the upside. As we roll into the next chart, let's see, we had price action, that was the reject right there at the naked VPOC. And price action here was your management, stop management at each swing size low, and then eventually taken out here. Your sell signal crossover indicating a trend change, AD line coming downside. Now your 20 ticks in the red, and now we see a break of the 50 downside. Why stay in this? And if we're going to head back upside, look for a new entry. If not, that's it. All right, so at this point, you're waiting for a setup and hoping all things might return to the upside, and boom, setup number 6 just ramps down with the rest of the indices. AD line starts coming down, holding here at the 10. You got a 20 tick to the downside. Again, I'm taking this picture after the initial setup. You're looking here, sell signal here. You got a 534 crossover. Unfortunately, at this point, price action is still right at the 50 period moving average, and the 20 tick is just starting to turn downside. The only thing supporting this big move to the downside are some tick counts coming to negative 700. So you're looking, and you could have looked for a re-entry on a smaller time frame. No entry here. Let it run. Unfortunate, not a price to pay, but just watch that thing come down. Again, you're looking for the entry. You want as many charts in sync. A great entry in hindsight, but the setup was just not there. Didn't take it, didn't see it. Watching the AD line approach 750, thinking perhaps right now the support might be here, waiting for a pullback entry. That's what I'm waiting for. The technical bias is evident. Now, day after day, I reaffirm that the fact that price action, you want to watch it here in this area, in between the 51.44, as price action's coming down here, I'm looking this and saying, well, the only thing that's going to support a better move is if price action breaks below that 144. And once it could not break above that 144, I know you might not have grabbed it at the naked VPOC. I know you might have grabbed it at the sell signal, but you had a couple opportunities in here with these two green candles on a smaller time frame that could have put you into the short as price action came down. Whether you chose to do that or not, that was up to you. And so setup number 6, we're into the European close here. Working our way down. Price action now the 50 under the 144. How far down are we going? There we go. We hit the Globex low. Tick count is 616 in the red. 50 is below 144. You're saying to yourself, we're not going to go any further, are we? And what do? We blow right past the Globex low, selling off right there to the previous low. We get a nice little bounce. We broke that AD line 750. Heck of a move. Looking for a pullback. Really never got that pullback I wanted. Perhaps I didn't pull up the chart in time. There was a pullback as we broke some of these lines. But again, I want you to get the bigger idea, whether you took it or not. Looking for this every single day. Look at that price action right to the zero, thinking that might be the end. Throw it out the window. It doesn't matter. What you need to look for is the sell signal. Look for as many charts in sync. If you don't get the original setup, then what you do is you look for the next pullback entry or the next setup. And coming back here, I wanted to show you, obviously I'm not chasing the trade. Let's go back again. This is price action to the previous low, and I apologize. I was saying there was a pullback here at the Globex low. It was actually higher, but once price action came here to the previous low, the only entry in my mind at this point is saying I will only take a downside because technical bias to the downside. And so what you had to do is here's the price action coming down here. We had some chop here at the previous low into the lunchtime hour Eastern Standard Time. You have the 20 tick still in the red. You got you have the 1 minute 50 144 chart still in the red. You got a tick count that's deep selling. We don't have much in the green up here. AD line is just doing this complete reverse, and there you go. How many times did we test that previous low? 1, 2, and boom, 3. So you're looking at the sell signal. You might have gotten in here. I wouldn't have taken this. I would have waited for the break below previous low. And so what you have to do is you have to go to a smaller time frame. And there was that signal approaching the previous low on the third attempt. And there was your sell signal on a 6-3. Breaks below the previous low. All 4 charts in sync. That's the move. That's the move. That continued lower. And there you go. 20 tick, 51.44. We're on setup number 7. Continues from the previous low. Now, what I didn't draw on the other charts, which I did pull up on this chart, notice all that chop action at the previous low. Why wasn't it pulling up? Why didn't I see this thing going higher? Because it was hitting up above the Camarilla pivot, Camarilla low pivot, and or Camarilla low line, not the pivot, but the Cam low. There was the rejection. So again, mindset, technical mindset was all to the downside. And there it was. Look at that deep red count, negative 552. 50 is still below the 144. Look at that 20 tick, keeping you in the trend. Setup number 7 to the downside. Major ticks on this move, breaking all the way down to S2. Nice little bounce here at S2 at 46.11.75. You got another point of control downside. 50 still below 144. We had that entire move, chop here at the previous low, re-entry to the downside, And was it S2 that was going to be the move? Oh no, it was the naked VPOC. Got to close that out, 46.04 as 20 tick. And again, another opportunity for a re-entry here, and this is on a 10.7, a 10 tick range chart, Flex Renko bars. Well, it was setup number 8 after the bounce to the downside and the NVPOC. If you go back here, time frame, we were here at about almost the top of close of the lunchtime hour. Right here, price action. Again, the S2 NVPOC, which is pretty much the chop that we had the rest of the session. Setup number 8 with a buy signal here. What are you thinking here? Not the best of moves, but you're thinking tick count came up here on this move up to almost 700. You got price action. Bottom fish feeders maybe looking for a move. Keeping aware of the 50 period moving average up here. That it might just reject off that. AD line is starting to turn here. We're at the 107 Eastern Standard Time. And what does price action do? It actually comes back, turns back around. So into setup number 9, you were taken out, stop. Maybe you got back in. You know, at this point, it's maybe scalp entries. You're thinking contract rollover. Are the big players selling off? It doesn't matter. You're looking at your technical setups and you're asking, where is the big bias? And even though you had a buy signal here to the upside, you're thinking 20 ticks to the upside, maybe not a bad move. Here was the first original entry. No way, I'm not taking that. That's just a T3 moving average crossover. But here, look at this bar right here. You got a solid Heikin Ashi bar tail up. You got some little bit of room here. You might get up to that 50 period moving average and reject. And so there it went all the way upside, and yeah, it played itself out because right at 104 Eastern Standard Time, what did it do? It rejected there and came down, and that was your setup to the downside, and that was the preferred bias on the technical setup was to the downside. So not a bad setup. If you had waited, you probably would have had a smaller time frame entry right here on the breakdown of the NVPOC to the downside. Again, these aren't bars that hit all at the same time frame. It was pretty quick. I mean, this is all within 2 minutes, but plenty of time to enter the trade on a 10-tick range chart. Once again, we got another setup to the upside, but at this point, your mindset is, you know what? Just look what's happening here. Probably might, who knows, get some chop. You got multiple setups. You got reject at the VPOC, comes back down again. Not a bad setup here. Why that sell signal not good? Well, that candle's not a trending candle to the downside. Again, maybe a short scalp here, maybe a short scalp here, but you can see what's keeping you in the trend for every move to the downside. Same trade management. First contract off. I would have waited too long to take off the first contract. I would have taken it off at maybe 5 contracts and then see if a runner go. Usually, I would have been looking for a lot more today, which I did in the morning. And but the afternoon session was hands off. Here we go. Price action here at the 147. You got a buy signal to the upside. AD line is now making a turnaround. You got a tick count that jumped up to 700. You're finally breaking through the 50 period moving average, which makes this a better setup. Again, we're looking at the 147 signal, and there it was. Again, you might have gotten a couple ticks, and then what did you do? 2 red bars downside. Hey, you know, you could have kept it the stop at swing size. Again, I'm talking about the potential here. I'm not talking about actual trade here because hands off in the afternoon, but I'm analyzing the afternoon setup. I'm seeing a lot of chop, and this is one of the reasons is to stay out. But again, the trade management would have been the same. You had a good trend on the T3 moving average crossover. You got a 20 tick upside. You have price action breaking above the 50. So that is I'm just looking at the setup and saying that is a valid setup. That's a good buy signal to the upside with a tick count that jumped up above 700. Setup number 10 and breakout above S2. Doesn't go very far, comes all the way back down, coming back down to NVPOC. And look at that AD line. Could not break above that 10 period moving average. And the 20 tick back in the red as we're at the 230 time. And so setup number 11, and I don't know how many chop opportunities, but it really was by this time hands off and not interested anymore. Setup number 12 by the end of the session. We got post 1 hour, yet another possible move here. Buy signal to the upside. You had a breakout above the 50. You're watching the 144. Again, it doesn't matter what time of day is. You still want to always analyze what makes a valid setup. I want more charts in my favor. Here we have the T3 moving average. You have a 534 crossover. However, your 20 tick is just starting to turn around at this point, then eventually gets in the green. At this point, I'm thinking, great, nice possible entry, or am I going to keep my hands off? Like I said, I would be looking for a pullback at this point and a break above S2 and wait for the break and price action above the 144. And so there it went. That's what you were looking for. Setup number 13 to the upside. AD line finally breaking above that 750. 20 tick upside. Break upside above the 144. Tick count at 800. And boom, nice move to the upside had you been in the trade. And there it was. Setup number 13 running. AD line upside. We had the tick count up at around 800, 900, 1,000. There's your 20 tick in the green. Price action breaking above the 144. And it was setup number 13 that ran for a little bit and then pulled back. And by this point, we're only 10 minutes to the cash close. AD line's holding off. 20 ticks coming downside. And you say, I'm done with this. Let's get this contract roll over and maybe start trading next week. But hey, you know what? FOMC next week and quad witching. I just take off the rest of December and come back in January. So there it is. NQ at the close. Price action came back downside. Found support at the S2. Really no more setups here. You're just chiseling away at the 51.44. Look at that gap. Close it out. All right, so we started the picture. The big picture was a little bit of bullish perspectives, just starting to bearish. We had a little bullish, but there it was, bearish to the downside. Bearish, we closed on the swing position, breaking underneath the 144. Go back to the first picture, you'll see the change here is still the big picture as we head into tomorrow. So look at that, we found support at the 38. We came down now to 50%. Almost getting back down to that 61.8. So we get down below 45.83. We'll eventually come down and close out some former open daily gaps and VPOCs. There it was, the bullish approaching that 50 period moving average. So again, swing position selling off, bringing this bigger picture on a daily a little bit closer to a bearish trend. There it was, the move of the session on the NQ. Unfortunately, missed this entire move down here, sleeping at the helm, but sell signal here. You had an opportunity for a re-entry there, missed it. You might have taken the re-entry at the Globex low had it been there. This was the better of the moves right here, coming downside. Here were the two best moves, all four charts. This is what you might have been looking for. All four charts as you broke below the previous low, which was down here. After several attempts, breaks down and then all the way down to S2 and to the former VPOC, which was about the low of the session. Taking a look at the other indices, TF, wonderful move to the downside. There it was. Again, the better of the entries. Like I said on the NQ, the first entry you might not have grabbed. Here was not a bad entry. Three charts in the red. It was the it was the third entry downside here with all four charts in the red that would have put you in mid-session. The rest of it looking chop. YM, king of the indices today. Here we go. We had a nice move to the upside. We remember the NQ was upside, but a lot smoother on the YM today. Buy signal, buy signal. These two moves in the green pullback. That's exactly what we're waiting for on each setup. Again, you might have missed the first entry. There's your pullback entry, all on a higher time frame. Didn't even need to go to a lower time frame. 3 charts in the red, 4 charts in the red, put you to the downside. And here we have on the ES, 12.50 a contract. Big bucks today, big ticks today. Sell signal, sell signal. Hey, it might have been the second setup here, the third setup, but it was the fourth setup with all charts in the red. Okay, you missed out on this. That's all right. It was the fourth setup here. You might have been pulled on this, but again, I don't have any other charts in front of me to indicate what this line in the sand was. So for me, I would have most likely wanted the breakout from this line, and that's where it was. This sell signal, you might not have been in it either. If you drew a line here and those two green bars on a smaller time frame might have put you in the trade and put you in the short. If I have to say one of the entries on all this whole line down, it was probably down here. That would have been the trade of choice. Again, it's not about always getting the whole move. It's about what part of the move did you get and not give ticks back to the market. Finally, wrapping up with the crude. It was the oil report out today. Crude coming down back from the highs in the 40s from the beginning of the week, and now we're back into the 30s, 37. Again, a couple moves here. Not the first original move. It was the second move here with 3 charts in sync, 4 charts in sync on the crude. Gave you some healthy ticks for the day. All right, that concludes today's daily trend for December 9th, 2015. As always, Feel free to stop by at Trading Fibs or any of my social media outlets to obtain more information. My mantra is one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs, and as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Stay safe out there with your trading. We're getting into contract rollover, FOMC next week, so who knows? Just make sure you have as many charts in sync to give you a higher probability of the trade. Have yourselves a Blue Zone day, good night, and good trading.